Here's an anecdote from our proprietary trading desk in New York City. A consistently profitable trader, CPT, shot me an email this past week to chat about struggling with a recent bump in size and risk. He felt he had taken a step back with his trading after being given the opportunity by the firm to take a few steps forward with his newfound share size and risk. His recent struggles were as follows: forcing trades, forcing size with trades, hitting bids to enter short trades because he could, unease with the new numbers on his P&L, anxiousness. The consistently profitable trader had experienced this before with recent bumps. So we chatted about a solution going forward from here. If not, the next bump in the future would be met with similar struggles. The good news was this trader had been through this before, so we shared that optimism that he would find a way forward as well. My textbook solution, literally from the playbook, was to think in percentages. He was prepared for a weekend of review to get back on track by studying his recent past reasons for success. I asked if he could break down his trades with edge into percentages of risk based on his intraday stop. A+ trades might receive 30% of his intraday stop, B trades might receive 20%, feeler trades might receive 10% of his intraday stop. This CPT felt he would be able to do this and could start applying these percentages to his new share size and risk. All he would do was change the share size and risk in percentage terms based on this new and higher intraday stop loss. Moreover, it's common for traders succeeding to become overconfident. After all, he earned his bump and increased share size because he was performing. He was outperforming. Performing well often requires self-awareness to be careful that overconfidence will set in and infect trade decisions. Overconfident trading can be quite dangerous. The CPT agreed this was worth taking periodic temperature checks. Entering more sloppily with large size is a recipe for underperformance. Essentially, you want to be trading the same way you had with smaller size and at risk levels when you move to risk levels that are higher. Entering more sloppily with larger size is a recipe for underperformance. Essentially, you want to be trading the same way you had with smaller size and risk at levels now higher. Entering shorts carefully on offers substituted for hit and bids will negatively impact your P&L. Worse, you're completely changing your trading and your risk profile and your edge. Directly, I said, this needs to stop. Using a Dr. Steenbarger, who's one of the great trading coaches in the country, analogy of lifting heavier weights, we moved to a new observation. When you hit the gym and you start lifting heavier weights, they are, well, heavy. Over time, your muscles get used to the heavier weights. Just like with added size and risk, the trader through exposure will get used to this new size. This seemed to comfort the trader. Talk sessions are just a start. Now it's up to the CPT to do the work required to push through this challenge. He will. He has in the past. He's inspired by watching others on the desk excel to do the work. He's inspired to become the next high-performing trader on the desk through smart work, talent, patience, coaching, mentoring, and individual edge. As always, these are stories from our prop desk, our professional proprietary trading desk. I know they're shared by some of you who are listening at home. If our guys can overcome these challenges with solution-based techniques, then so can you. I hope that helps. Trade well. We'll talk to you soon.